You're tuned to the Leadership Strategy Foundry with host Neil Evans. In each episode, he interviews top influencers in the financial services business sector. One of them might just spark that idea that ignites your bottom line. Here's Neil.
Welcome to today's episode of the Leadership Strategy Foundry. For those of you just joining us, we specialize in helping portfolio operators and growth-focused companies identify opportunities to scale revenue and improve execution across their business units. Today, we're joined by a guest with a unique perspective on building and investing in companies. Today, we're joined by Mitch Brooks of High Street Equity Partners, a firm focused on acquiring and growing middle-market, founder-led businesses. Mitch brings a perspective grounded in both investment discipline and operational reality, with a focus on building value over time through partnership and execution. Welcome to Leadership Strategy Foundry, Mitch.
Thank you. Thank you for having me.
All
Great
right.
intro.
So can we jump right in? You cool?
Let's jump in.
All right. So you've chosen to focus on the lower middle market, particularly founder-led businesses, Mitch. What originally pulled you toward that segment instead of, say, larger, more institutional deals?
Yeah. So I started in this venture asset class as an executive, thinking deeply around how I wanted to put my capital to work. And I chose the asset class of venture, where some of my colleagues chose the asset class of public equities or even things like art and boats and the like. And so as a young executive, I started to angel invest. I had a few exits that were rewarding. And I think in addition to that early taste of success as an angel investor, um, I deeply connected and resonated with the idea of making investments in companies and syndicating deals and seeing those companies grow and seeing my business acumen able to support those companies and growing. And so that's what I would say. That's how I got bit by the bug.
Oh, good.
And as I started to go down this road more and more and syndicate deals larger and larger, I knew that this was the space for me.
Great. Can you tell the audience what genres of businesses you generally work with, if there is a specific
Yeah,
genre? Hmm.
there are uh, three sectors in particular that I focus on: what we call the future of work, the future of care, and emerging technology. And within each of those, there are sub-thematic areas. So there's what we would consider to be a lot to pick from. As an example, within future of care, that's health technology, digital health. Within that, value companies with value-based care models, specialty care companies, as an example. And so within each for us, there are around 4 to 5 sub-thematic areas where we look to be laser focused.
Okay, great, great. Listen, when you first engage with a founder, how does that, relationship typically start to take shape, and where does it tend to get more complex as you go deeper?
How does it take shape? And how does it get complex? Yeah, my thought is that Neil, it the best way for it to take shape is through a warm introduction. I find that those tend to be the best investments that you can make. I acknowledge that there's some structural challenges to that for some, advantages for others. Um, but be that as it may, it's through the warm introduction of someone that I've worked with, that has worked for me, that I respect. Um, and so I think that's the best on ramp and intro. I think to the second part of your question, uh, the interesting parts of sort of unpacking things, I think that the best way that I framed it to entrepreneurs is that it may be a great business. It's a matter of if it's in alignment with us or if it's in alignment with the fund thesis that you're looking to talk to. And so I think the best way of thinking about that and going about that is for the entrepreneur to try to get an understanding for what's in alignment with the fund thesis and how it thinks about success in the short term and in the long term.
So,
And one of the things that I found, connected to that is how inquisitive entrepreneurs are to understand that and to learn alignment. Understanding that, I think that the our investment partnerships are very much similar to a marriage, and that it needs to be alignment on both sides of the deal, and so it should be a dynamic conversation from both sides.
gotcha. Yeah, I think there's a lot of psychology even when you have those warm introductions to those founders, right? Um, because you still have to do your best from a gut feel perspective to say, hey, this person's not going to waste our time. He's not going to waste our money. Or she, I'm sorry, I need to throw in the she's as well, right?
That's
For
right.
sure. This is a
That's right.
politically correct, commentary here. So, as you evaluate businesses kind of in fragmented industries, what usually stands out early, and where do things start to look different once you're further into diligence? So you've taken, you've thrown yourself over the hurdle, you've signed the wedding, the marriage certificate, etc., with this organization. So where does it, where do things tend to, look different once you're into that diligence?
Yeah, I think very similar to, well, I'll take a step back and say the interesting part about the business we're in is that you're looking to get married within typically a 90-day window.
Mm,
And I think some of the best folks that do the best deals, those relationships extend beyond that window where you've had a chance to see how a founder operates in market and just who they are as a person over a longer period of time, right? But to a great degree, the industry looks to meet a founder, due diligence, close a deal within this 90-day window. And what I'll answer from that perspective, and then on the back end give a different perspective. So from that perspective, what I find is that uh, you're really getting a chance to learn and understand uh, how they sort of showed up during diligence may be unique and different than how they live their day-to-day lives. And so during diligence, they have their financials in order. It's great. It checks out. But the reality on the back end of that may be that they look at their finances or they update their, books, you know, every now and again. And there's not a set and consistent cadence to it. And
yeah.
I'm using that as an example, right? And so those are examples of things I've seen the hard way, both as an angel and as an institutional investor, to where I've created some rules and guidelines and diligence questions that help to give me insight into that now. And so I think that's one example of, let's call it 100 examples of just once you've been around the block and you have a number of reps in, then you know how to think about that and sort of how to navigate going from, I'll call it pre-investment to post-investment, right? And I think that when we think about having relationships over longer periods of time, then it allows you to talk to folks during good times, during bad times. You get a chance to see when it's tough news to share, do they avoid it or do they run into it and do they proactively call you? Or do you have to call them and sort of there's this, back and forth to get in contact with one another. I really believe that there are things like that that points to folks' character and just points to how they operate their business as individuals. And I think that gives you great insight. And that's to say, every time I don't run away from folks that may do some of these things. I try to have an open and honest conversation with them, and I try to get them to see some of the things that I see as signals, with the hope that they can share with me. Like it may be something going on in your personal life. It may be a number of different things, but let's figure out how we're going to look to communicate through difficult times And then I'm interested to see what does the second instance or the third instance look like. And so for me, I've found that having these relationships or these connections over longer periods of time, which is why I say to founders often, I'm interested in connecting with you in the realm before you're coming to me. And so I would love to just use that as an opportunity to have an organic relationship and to grow that relationship going into your investment round with us. And so I guess to your listeners and supporters, engaging investors prior to you feeling as though you may even need them, and things don't have to be perfect, I think is a great way to think about it to cultivate those relationships.
Well, Mitch, you talked about sort of about the remediation of problems, but in these situations, these founder-led situations, where do things most often not go as planned during a transaction or a transition? In other words, going deeper as to some of the things that you trip on or observe, or the signals, you mentioned signals as you're moving along through that process, the transactions happened. What sorts of things just seem to bubble up in your experience that probably weren't what you had hoped or foreseen? You've got quite a track record in this, so this is not someone who's coming into it yesterday and say, "Well, I don't have any experience." You do.
Yeah, yeah. I'm interested to hear from you some examples. So I'll give you some examples um, of late, and then welcome you to look to dive deeper into that and have a dynamic dialogue with you. Um, One example is that we made an investment based on the P&L that we reviewed during diligence. That P&L had a set allocation for engineering team, and we asked the right questions during diligence. What does the product roadmap, what does engineering look like going into the future? And post investment, there were pretty shortly thereafter, there were decisions made to double down on some engineering initiatives where it doubled the cost of the engineering team. And I think the worst part about that was that the majority of the engineering team was outsourced and it wasn't in-house. So that wasn't a locked-in cost allocation. It grew exponentially with sort of scale in their idea of what they wanted to do. And I think the most difficult thing for me in that situation was that that's not what was articulated and communicated to your investment partners coming in. And uh, we found that out on the back end of doing a quarterly check-in, and there was not a dynamic discussion along the way that, like, hey, this is a decision that I'm looking to make. I'm interested in bouncing that off of you all as my partners and advisors. Um, and so is that where you're looking to go with this?
Oh yeah, yeah, for sure. I mean, I talked to quite a number of operators, whether in the PE, VC space, portfolio operations, and the financials are always that big fuzzy blur because these are very small companies, relatively speaking, and they may not have a button down, due diligence, and you're just like with the founder, you're betting on the founder, but you're also betting that the financials are transparent enough that you can make a reasonable bet that's better than going to Vegas. Some of the other kinds of things that operators talk about are also the questions of, okay, so I've got this founder and everything he does is relationship based. So if we lose the founder and we buy that business, do we lose the business?
Mm,
There's just a host of them. Or for instance, you have founders that hold all the cards when it comes to sales. Okay, so you're investing in that business and you're trying to detach that founder from discipline so that the organization can grow. Well, I've been in that same position where I've grown through a company and the boss, the CEO will come up to me and say, "Neil, I need you to split your job a little bit, okay? You're holding too many cards here for the
mm.
sake of growth." Do you run into those sorts of things as well?
Yeah. What we call it in the industry, founder-led sales, founder-driven firms. And to that end, I, it it is on us as investment partners to ask those questions coming in on the front end, and it is on us to decide if that aligns with our fund strategy and our investment strategy. And so, as an example, I'm very clear when I go into investments if it's a founder-led sales organization. And one of the questions I'll have as I'm going through diligence is, do you plan or what is your plan to build out a sales organization? Have you started to put together a sales playbook? Have you started to think about your ideal customer profile? These are remarkably important things so that I can see if this will be able to grow and scale beyond you, or if you feel as though that's not in your plan with your company. Um, and what I found is that most founders are very open and interested in doing that. They may just not know how to do that.
Hmm.
And so they'll say during diligence, I would love if that would be one of the things that you will work with me on, as an example. And so, admittedly, I know what I'm walking into in those situations. To one of your other examples, we currently have a company in our portfolio that is being pursued by a strategic acquirer for an exit that would be a great situation for everyone involved,
Hmm.
on the sales side. And as they were going through their diligence with the portfolio company, they said, hey, we did customer calls, and some of your customers spoke highly about a particular team member that you have on customer success side, and that we know that we would need to close this deal with that person as a part of the package deal. And so, I'm sharing with you, yes, conversations like that happen on a weekly basis. And we deeply understood that. So what does it look like to structure a deal where those team members are incentivized to stay around during a
Mm.
transition and maybe even have an earn out because they're viewed as such a key person and valuable team member to the sale and the transaction. And so, yeah, we see it all the time.
Yeah. Obviously we don't live quite in nirvana, and I'm just wondering if there are early signals that you've learned, having been in this business as a trooper, that suggest the business may be more dependent on the founder than it initially appears. So
Mm.
again, I don't know if you're clairvoyant. Maybe you are, but I'm just wondering if there are certain signals that you've sort of tuned yourself into to say, whoa, 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 this one's going a little awry on me.
Mm. Well, broadly speaking, there are signals if a venture and a deal is going awry. But your specific question, and if I may ask you to help sort of
Sure.
restate it, your specific question is not only about the deal going awry, but it's about how a founder is not interested in loosening the grip off of the steering wheel. Is that the specific
Yeah,
question?
yeah, that would be more the case in that particular question, Mitch, because I we all hold what we believe dear to be close to us, right? And a
Hmm.
founder who's built a business from, let's say, zero to a couple $1 million, that's a big deal.
Hmm.
That's really a big deal. Just, put
Hmm.
that in the thought process. You're taking something from zero to an entity that has value. And I want to call it the human nature possessiveness kind of cuts in regardless of what the deal with Mitch was at the beginning. Have you kind of learned, is there some sort of signal that says, whoa, we need to do something? I mean, you've kind of addressed it a little bit in the last question, but I wonder if there was anything else that just, says, oh, when I see them do this, when I see them do that, we have to have the dad talk.
Yeah. Um, the biggest signal and there are a few. I'll think through them. The biggest signal that comes to mind is the frequency of communication,
Hmm.
and it's a very, very clear signal. And I think it's human nature for when people don't have good things to say, they don't want to communicate at all about their company. And I would encourage entrepreneurs to fight the urge to do that. Um, and I think connected to that, it's also a clear signal for us as investors where all you want to share and talk about is your good news. And you do not want to talk about your challenges because we know if you're building a business and pushing above your weight class and growing successfully, we all know that there are challenges along that journey. And so to position all of your partner updates as the world is great and green, we know that that's a signal that you have a disposition to keep things away from us and not share things. And that typically is the door or the gateway to other things playing out among that relationship and like it going all bad. Um,
I'm
so,
glad you
so
mentioned that,
yeah.
Mitch. I'm glad you mentioned that because I was just going to jump on the what happens when. So
Mm.
maybe you could continue on that road a little bit. You've talked a little bit about mitigation earlier in our chat, but when you see that sort of going off the rails, what what's the consequence and what's the remediation for that? I know you were going down that path, and pardon me for interrupting you, but I wanted
No,
to
you're
jump
good.
on that thought.
Yeah. What's the path in the remediation? So, um, it's worth sharing context that the investor that I am, I take a minority position. And I'm acknowledging that some of um, investors and supporters and followers of your show, they may take a majority position. And so in their cases, it's easy for them. They have a majority position, they swap out the manager, they find a new manager, and they keep
Hmm.
going about their lives. For those of us that take a minority position, we walk into these situations understanding that you have to be collaborative. And I think about my role as an investor that then becomes an advisor on the other side of the transaction, where I'm not looking to tell you what to do. I'm trying to get you to see what is on the table here. And I really want to lead you to get to the answer. And I found in particular with the type of entrepreneurs and founders that you're talking about a little second ago, where you've created this thing, you've taken it from an idea and zero to X millions of dollars a year. There's some emotional connectivity to that. And what I found for those folks is that just giving the persona of what you, the persona of an entrepreneur to take something from zero to several million in the face of darkness, in the face of adversity, in the face of family and friends saying, "What the hell are you doing?" And you being remarkably optimistic and even stubborn about that. There's a certain persona of an entrepreneur, and I'm very clear that I can't take the good and throw out the bad. There's a profile of that person, and the question becomes, how do you collaborate and work with that profile? And it's my strategy and my thought as a minority investor that comes in is that I need you to come across these ideas as if it's your idea, and I want to help you to think about it and see it. But I think it's deeply important for that type of person to see it as their idea. And so for me, my big picture is that's my strategy and thought. And then when we get into the nuance and the specifics and the mechanics of what that looks like, it's uh, talking through with you what you see as the challenge and talking through with you, even maybe even putting you on phone calls with other companies that are currently invested in or that we've invested in the past so that you can hear it from other folks in industry, across sectors, but similar functional, sort of the way in which they operate. And I found that those are the keys to success in getting these entrepreneurs and founders to unlock, to take a different direction, or to not be as stubborn in these areas where they've been stubborn.
That's a great tip, Mitch. Just turn your portfolio operator founder onto your network and say, look, why don't you talk to some of the people we've worked with? And, this is how it works out for everybody. So I think that's a great, great, great tip. Listen, switching gears a little bit, as you're looking
Yeah.
at your current portfolio and pipeline, what are you most focused on improving in how you operate or grow those businesses? I mean, you're pretty tenured, and it sounds like you've got things pretty buttoned down, but what are you focused on? Everybody's always looking for continuous improvement in our world, right?
Yeah, yeah. It is my goal that I want to automate as much of our work that I can using and leveraging these work automations and native AI companies. And what I've found is that, interestingly enough, even for the investors that are investing in companies that are looking at the next frontier in emerging technology, it's interesting to me that those investment firms are not highly leveraged when it comes to those technologies. And so they oftentimes are pretty outdated and using old systems, and not leveraging their full tech stack. And so for me, I've been deeply passionate with our team around knowing what's in market, around leveraging as much as we can of the technology that's in market to support us. So as an example, I have a fund admin team that's outsourced, and I push on them that I want us to be using technology that's in market to help us and how we operate in our back office. And I don't want to spend 60 minutes on a phone call if I don't have to, if we can spend 15, 20 minutes on a phone call, if we can leverage some of these technologies with our technology, with our tech stack. Um, and so for me, that's where a lot of my focus is. One, I think internally, so that we can focus on the things that matters most to me. And so, at one point in time, I want to say this was 2024, we did a pretty remarkable overhaul of our back office where we statistically felt as though we saved 50% of our work hours on certain tasks, and we increased our productivity by 2 to 3x.
Hmm.
And so not only did the tech help us to become more productive, but we also figured out how to, you know, uh, uh, flatten layers of our sort of workflow so that we won't have to touch as many things and do as much. And so my focus and intent is to stay in that direction, to continue to get better and better. And for that to allow us to be out and market more, touching and talking to more founders and looking to get ahead of the curve. Because as mentioned earlier, I think the sooner we can connect with companies that are not quite ready for us, but we can connect with them a little bit early, that allows us to start that relationship earlier, and it allows us to de-risk our investment for a really high upside on the back end. And so I see all of that working together to our benefit and advantage.
Oh, great. Yeah, that's really, really interesting. When, where do you see, kind of on the flip side, or maybe riding that wave a little bit, where do you
Yeah.
feel that things are less predictable right now than you'd really like? Whether that's sourcing, execution, integration, market conditions, whatever, wars, you know.
Yeah. Yeah. Uh, yeah, I have two hot takes in response to that. My first hot take is that as investors look at companies that are situated as managed services companies or even SaaS companies or SaaS business models. We are unclear around what those revenue multiples and exit potential look like, given the fact that AI has become the prevailing model at which companies are being evaluated. And so looking into the future, 5 years from now, 10 years from now, I'm worried that the companies that we have invested in with a SaaS model, the multiples and the projections we made on the front end of that may look very different
Mm.
5 to 10 years from now. And so that's something that I'm paying close attention to, and that we're worried about. And it's also impacting how we structure deals and think about deals now, and sort of the ways in which we think about what's in alignment with our fund strategy or not. Um, the second thought that comes to mind is not as much sourcing, but I think more around this idea of uh, how quickly companies can scale out the gate.
Mm.
And we're seeing that it's a brave new world, and that, the idea that Sierra AI is making $150 million. They haven't been in market for a year. They just closed around at $1 billion, as an example. And so things like that are happening within a remarkably constrained time period and quick time period. And so it's making you think about and reconsider, what does it look like to invest in companies that where that growth and scale looks differently. And we know that the numbers and size may be different, but the metrics and the KPIs should be able to apply across the board. And so I think those are two buckets of things that we're thinking deeply about, and that we view as I don't know if challenges is the right word, but uh, there's no clarity to them just yet. And so I think a lot of investors are developing thesis around, taking the data that they have and just looking to make educated guesses, and to say we have conviction in this particular path, and therefore we're going to put our money down on that path. And it's very clear some will be right and some will be wrong.
Yeah, those billion-dollar wonders, one-year companies are not unicorns anymore, are they? They actually happening. As a matter of fact, I was in a meeting within the last few days. We were talking about there are going to be a number of one-person companies, billion-dollar
Yeah,
companies that will emerge. As a matter of fact, they already have started emerging. On the flip side of AI, because that is really because of AI, there are still trades, there are still genres of business that are, we used to talk about recession-proof businesses, right? But now
yeah.
let's talk about AI-proof businesses just for a moment. Businesses that would exist in an AI world without necessarily the compounding of AI. Businesses maybe like nursing. Now, AI might take over nursing, probably not going to happen in our lifetime, at least not mine, maybe
Yeah,
yours. But
yeah.
do you give thought to maybe on the flip side of that and saying, hey, should we look at businesses that are going to, exist? Like, I think the most base thing I can think of is like a plumber or something like that. Those businesses seem that they are somewhat AI or recession proof.
I agree. I fully acknowledge that in this funding vehicle that I have up and running, that's not my mandate and in my wheelhouse. Um, and I am honest and direct with folks about that. But I think to your point, and Elon Musk even said it, and Elon's uh, I'm so on Elon sometimes, but I do think that he has great insight that I take heed to. And he mentioned something to the same point that you're making. A funny story. At my home, I called out to a plumbing company. This was around maybe 6 months ago. And when I did Google, looked for a company, called the company based on reviews and all of that, like, sort of the research that I did. And the entire booking system was AI voice driven and automated. And I was blown away. I was amazed. And so when the guy showed up, he was timely, he was punctual, he took care of my problem quickly. And on the way out the door, I shared with him that I'm an investor in market, and I was just giving him high praise around his company's AI voice automated system and just asking him questions, trying to get some insight into how that company is performing in market and what that looks like. And it's not lost on me that the company has, 2,000 five-star reviews or whatever it is. And from a search engine optimization standpoint, they're doing remarkably well. So, and I learned that the company was purchased by private equity, and these are systems that they implemented to turbocharge their investment. And so, to your point, there's some PE firm that has done exactly what you're talking about
Mm,
and suggesting, and they purchased these what I'll call legacy businesses,
right.
and they figured out how to, add technology to create value, and now that's 3xing, 5xing, 10xing the top line sales of those businesses. And so I think it's a really great idea, and I've been able to have a lived experience and seeing it for myself. So I'm a believer in it.
Yeah, interesting. Very interesting. Yeah, for sure. And kind of getting towards the close here, Mitch, as you think about scaling High Street's model, right? Where does the pressure tend to show up first? Because we kind of share, where we're going. Is it in deal flow, integration, talent, something else, money, funding? What what prevents you, say, from getting to whatever that goal is that you want to take High Street?
Mm, hmm. Yeah, I think that um, for m- our business industry, uh, it's driven by assets under management. And so that's fund managers such as myself developing strategies to say, uh, where do I want to fit on where do I want to sit rather on that spectrum? And looking to drive assets under management to be in your sweet spot, and ultimately looking to have the companies that you invest in uh, have success and successful exits in order for you to return your investment partners their money. And so for me, on the assets under management front, what we're finding very much in a mirror to the business industry is that you have a lot of companies taking in a lot of capital. I'm sorry, a few companies taking in a lot of capital. Um, and so you have your largest players getting larger. And I think that to a founder that's in market fundraising, they would feel that way. They would say, hey, a lot of capital is in market, but it's going to a few players. Um, and so I think on the other side of the table, it's similar. And so I think that companies have to be unique and specialized and, in my opinion, go an inch wide and a mile deep for them to be able to um, drive AUM and drive success and drive capital. And so that's what it looks like for us. And Warren Buffett said it best. He said that if you're a professional investor means you're specialized. And so that's how we think about it, and that's how we're in market. And so it's a matter of connecting with partners that are aligned with our thesis, that are aligned with how we see making smart investments and growing those deals in market, and how we're building out our team to be able to uniquely support companies that are in alignment with our thesis to grow. So yeah, I think that is what success looks like for us, and as we continue to grow and make things happen.
This is a question that I ask every guest at the very end, but you've almost kind of answered it a little bit, Mitch, but I'll allow
Okay.
you to go a little deeper and wider if you like. Okay.
Okay.
And this is my favorite question. And whenever you watch one of my interviews, you'll see. So, Mitch, if you could wave a magic wand and save and solve one challenge within your business or investment process today, what would it be? Or maybe you prefer the Aladdin's lamp and Genie comes up and says, "Okay, Mitch, I'm giving you one today." So, what would it be?
Um, if I could change one part of our process, what would it be? Um,
Change, not change, solve.
Solve.
Yes.
Oh,
Yeah, solve. You want
okay.
this is your magic wish right here. It might come out, the
Okay.
audience is going to say, "Hey, we could fix that for you."
Okay. Okay. Um, you know, eh, I have two thoughts.
Oh, go for it. Okay.
One is that uh, I have a fellowship program because I am passionate about viewing what I'm doing as a platform for others to be able to learn and grow
Mm,
and get into the ecosystem. And currently, I'm on my fifth cohort of the fellowship program.
mm,
And I view it as a way of doing goodwill in the industry, but also I'm also clear that those team members, once they leave my fellowship program, they go to work at other firms and capital allocators and market, and there's a net benefit and flywheel effect from that for us. So they'll become our cheerleaders and champions in industry, is how I see it. And I acknowledge that uh, this fellowship program and sort of uh, coaching and supporting team members takes away from my capacity. And so if I could solve for something, it would be for somehow, some way, those folks to get what they need to get to be able to learn within my firm. And at the same time, it doesn't require the level of effort, even if it's 20% or 25% from my team members or from me. And so that would be deeply meaningful to me. That could be solved.
mm.
Um, another, the second area that could be solved, I think, is fundraising. I think for everyone, I'll speak for myself. I wish there was a playbook around fundraising. And what you learn is that there is no playbook. It is uniquely tailored, and to a great degree, you have to do the hard work to make it happen. Or at least I have not run into a fundraising playbook that says, based on these characteristics and based on these traits, this is the playbook for you to go to market. And these are the platforms and the institutions and the point of contact for you but you still have to do your part, and you still have to, convert them and see it through. But here is the playbook. And the reality is that there's that tends to be a pay to play uh, field and realm, and you have to figure it out even while you pay to play. And so it would be really nice if that could be solved for me and for others.
Gotcha. Great wishes, and you never know what will come when you put it out in space, Mitch. That's what one thing
I agree.
I've learned my entire life that you might get something if you don't ask, but if you don't ask, the probability is low, and if you do ask, the probability is a lot higher. So one thing I do
Yeah.
not want to forget is How do people reach out to you? Because that investor is sitting there saying, "Oh, I really like this guy, Mitch. How do I shovel money into his pocket?" So, would you tell the
Uh,
folks how to reach you, your email, your LinkedIn, your phone number, whatever you want to share, and we'll get it
yep.
conned onto the podcast, okay?
Awesome. Awesome. So my email is very easy. It's Mitch, Mitch at hsep.vc. And similarly, very easy to reach where I can be booked for a meeting, a conversation at hsep.vc/Mitch, Mitch. And so going to that link will find and sync up our calendars to book time. And sending me an email is a way that either me or the chief of staff will follow up from the inbox.
That's super. Mitch, this has been a great, great interview. I just loved it. I think
Oh,
that you
thank
have
you.
such great insight. You're a thought leader. I appreciate that you share. And I think that goes a long way. And I know that the audience is just going to love this podcast. But with that, I'm just going to say, Mitch, thank you so much for joining me on Leadership
Great to be here.
Strategy Foundry today. And I'll say that's a wrap.
All right. Great to be here. Thanks for having me.
We hope you enjoyed the session and hope you picked up a pearl or two. Just a parting note, of the many business leaders to whom we speak, we find that one of their most pervasive issues is about filling their pipelines with qualified leads. If that's an area of concern where your organization could use an assist, head on over to aisolutionsfoundry.com and book a complimentary strategy session. This is one of our many programs that help organizations like yours build financial value that drops directly to their bottom line. See you on the next episode of the Leadership Strategy Foundry.